Hey guys, it's Leila Perez with NOLA Living Realty. I'm just here talking with Jordan Gerard at Northshore Mortgage Partners, and he's kind of given me a rundown on a few of the changes that are happening with various different loans, including some that may affect some home buyers right now that might be in the process of buying a home. So, Jordan, why don't you? I guess a lot of my clients are VA, so how does this affect
Absolutely.
VA borrowers right now?
Yeah, I'll fill you in on the whole landscape, but first I gotta apologize. Your background looks nice. You're dressed nice. I'm in a white T-shirt at the office, so I feel like if it's a split screen, it's not quite. Keep your eyes on that side. That being said, I'm a veteran myself, and we enjoy helping veterans. And one of the things we've done a ton of over the years is VA loans, especially in Texas and Louisiana, where we really focused. But not only that, FHA, USDA. When we say government loans, it kind of wraps FHA, USDA, which is Rural Development, and VA. Those three loans are all backed by Ginnie Mae. So those three are all being affected equally. Your conventional loans are a different sector, which is Fannie Mae and Freddie Mac. Those are having an entirely different market right now. The crazy thing is you're hearing all-time low rates, and there really are all-time low rates. So in that sense, if you're looking at a conventional loan, if you have 740 credit, you can get a rate right now that is literally better than any other time in the history of our country. However, because of what's happening in the market, because basically, and this is not a fair assumption, but the assumption is your more qualified borrowers are conventional, and your less qualified borrowers use the government loans, FHA, VA, which we know is not true. The people who back those loans have pulled out of the market. So you're seeing a ton of shift in this market, the government loans, which includes VA. So your borrowers who are looking conventional are getting all-time great rates, and your VA buyers are basically in the middle of a true uncertain time right now. Several people that I've talked to pre-approved VA borrowers last week at 609, 610, 615, because 2 weeks ago, that was an easy credit score to get approved on with the VA loan. Now,
Okay.
what has changed? Can you still get approved with the 615? You can. The problem is there's zero investors buying that loan. So most companies have told their loan officers, do not give loans under 620 or 640 to VA, FHA, and USDA, when previously there was no minimum credit score or it was 580. So we've seen that bucket shrink a ton simply because the investors assume that if people start deferring mortgages, the investors assume that if people start missing mortgage payments, it's going to be those lower credit score government borrowers. So the box where we used to have a huge span to put veterans into has literally shrunk. I had several veterans that were out shopping already pre-approved. I had to call them and tell them to stop. We don't have a loan for them right now until the market opens back up to those areas. It can be kind of confusing. I understand that, but there is a difference between being approvable and actually being able to give you a rate. I ran through the entire system yesterday, got a pre-approval on a VA guy. The system accepted it. Then I went to the rate sheet, and there was not a single rate on the rate sheet. So I couldn't do a loan for him. And that's kind of where we're at right now because no investors want to buy that mortgage. We can't do loans for lower credit scores. It's a sad spot to be in. And to be honest with you, the way the stimulus bill was written, it really focused on, helping the consumer. And it had a provision in there at first for the government to aid the buying of these mortgage-backed securities. Basically, what that means is the government knew if they allowed loan deferments, there was going to be problems in the marketplace. When they couldn't agree to the bill, that help that was going to be given to buying those mortgage-backed securities for the lower credit scores was pulled away. So now you basically have no one who wants to buy these loans. It's a pretty tough spot to be in if you have a lower credit score because literally 2 weeks ago you could buy a home and this week you can't.
Right. So what actions are you guys taking right now to protect borrowers and to protect sellers too that may feel, like I'm personally reaching out for my seller clients and touching base
Right.
with the lenders and asking the question, how do you feel about this loan? Will you be able to close it given these new guidelines, given where we are right now?
Absolutely.
So
No,
is
that's
that
a great question. It's a great question because every company's treating it differently. And that's where talking to that specific loan officer is going to be important. I know for us at my company, if we locked your loan in previous to the changes, we're going to honor that lock because we're not going to tell someone they have a loan under contract, we changed our mind. But if you were just pre-approved and you were out shopping and we don't have a house picked out yet, we don't have a contract, we're letting those people know we can't move forward because they're not a full application yet because they don't have a house. If you are already in contract, we are not canceling those loans. We're not deferring those loans. We're not holding those loans. So anyone who's under contract, that should not affect them as much unless companies aren't acting responsibly, in my opinion. This is more for people who are about to apply, who have already applied but haven't found a house. That's going to affect those folks more. So the stance that we're taking is if you're already in processing, already under contract, we'll help you. If you're not, we'll spend the next couple months helping you build your credit, helping you get to a safe place. That way, one or two things is going to happen. You'll be ready to buy a home because our new minimum credit scores, the new normal is 620 instead of 580. We'll help you get to a 620. Or what I really, really hope happens for everyone is as fast as this spiked up, it'll spike back down.
Right. Yeah. So.
And then in 2 months, we'll be back to 580 and no problems, you know?
Yeah. Well, is there any additional steps that you recommend? Maybe people who are right at 620, should they be doing anything to try to improve their score? Or like if they haven't already found a house, should they be doing anything, you know, to, I don't know, what recommendation would you make? I know it's different for every single borrower.
It is different for every borrower. And what I'm telling my team right now is communication is always the most important thing in the process. But right now it's by far more important. Everyone's at home, everyone's stir crazy. You have to keep people informed the entire time, the entire process. And if you have a 620 borrower who's right at the cutoff, you need to make sure they understand the entire severity of the situation. Hey, when I talked to you 2 weeks ago, this was a slam dunk. Now this is a fringe deal. Okay, so while you're out shopping, let's not just assume this is going to get done. Let's assume the regulations are going to keep getting tighter and tighter. Let's keep working on your credit. Let's get it up. I think if you're buying a home, the eye should always stay on the prize, and you should still focus on, you know, improving your credit. I remember a story from a few years back that I talked to a guy, and we had to pull his credit again before closing, and he quit paying all his bills. And I asked him what he was doing, and he was like, oh, I got approved, so I needed to save money to buy the house. I'm like, you got to keep your credit up all the way to the end. And I think that's important right now.
And that's the biggest thing. I think that goes back to the whole communication thing and just making sure you as their lender, you know, ask the questions of, hey, where have you been at with certain things or whatever. And then if they feel like, you know, this whole thing that's going on right now with the virus is affecting their income, that they tell you, hey, this is where we are, you know, this might be an issue down the line. Or
we gotta make responsible financial decisions all the time, but even more so now because there's so much uncertain right now. You know, Leila, like if you're in a job where you don't know the future, I mean, I don't want to discourage anybody from buying a house, but you know, if you're uncertain of your income for the next coming months and you think there's going to be a problem, it may be a smarter move to just see what it holds. I've been through the 2008 crash, and it was prolonged. It was long, it was heavy, it sloped down slow, and it took 10 years to come out. This is not an economic recession. This is simply a virus that has drove the market down, the economy down really quickly.
Yeah.
Correctly. We saw 5 times more jobless claims last week, 5 times more than the largest week in history previously. That was not caused due to a slow economy. That was literally caused by doors being closed. As soon as this is over, those companies aren't going to have to, for the most part, wait. These restaurants are going to open day one. These casinos are going to open day one because people are going to
fly again.
Yeah, they're going to fly in.
They haven't seen. They're going to be like, I'm getting on that first plane to go see mom and dad, or
absolutely. You know. So you're not looking at a 10-year recession. You may be looking at a 2-3 month recession. So if you can absolutely wait at all, if you're in a tight spot, an uncertain spot, use this time to prepare because the good days are really, really close behind, hopefully, and in my opinion. So I would be using this time to get with an agent, you know, talk about things I need to do to prepare. I wouldn't just sit on my hands and wait, but I would start the preparation so I was in a way better place once, you know, our country is free of this virus.
Yeah, and that's the biggest thing is just informing yourselves. And I always tell my clients, reach out to a lender, even if you might be a little bit far out, because if they do see certain things going on with your credit, they can make those recommendations and say, hey, go ahead and while we're waiting, we're going to have to wait anyway. Let's just start paying, this account or that account or whatever it may be. So it's just taking that same kind of being proactive with the time that we do have at home, because it is a great
I
time
agree.
to, if you're not ready to buy, or if you are hurting because of what's going on right now and you're not working the same amount of hours, then at least you can inform yourself and know moving forward, or when that check hits your account, right, that you
Right.
say, okay, well, this is what I can actually put it towards.
And I think it's very important. We all, like we're talking about communication, we all work together. In the past, the lending market has been a very, very aggressive and cutthroat industry. I got a call this morning, and in the past, the agent was very upset. She said, I have a buyer who's USDA who had a 598. As soon as we got the contract, we called the lender, and he said, I'm sorry, you missed the cutoff by 10 minutes. We just changed to 620 minimum score. These people were already in the contract, and they got caught in the crosshair of the changes. In the past, when it was a competitive market, as a local competitor, I know this guy is probably my biggest local competitor. You want to make him look like he doesn't know what he's doing, but you can't. I literally told her, I said, man, he's absolutely right. Same thing would have happened if it had been with us, so we can't, use this changing market to, steal clients, to make other people look bad. We have to back each other up. Some other agents were calling around and saying, hey, can you do this deal? Could do this deal? And I understand that you want to help these clients, but now is not the time to try to force square pegs into round holes. Now is the time to adjust to the reality, educate yourself to what's going on, and then educate your buyers properly. If you try to force people in borderline situations into tough loans, they're going to get denied. They're going to end up in a spot that during the process, the money is not free flowing right now. Just like in the economy, people are sitting at home watching. The banks, the investors, they're sitting at home watching. I hate to say it's scared money, but they're not going to lend money to people right now that would typically get lent money to. Does that mean you can't buy a house? Absolutely not. It just means the more risky borrowers, the box is getting tighter. Very similar to what happened in 2008. I mean, the FHA minimum went to 640 overnight, but it stayed there for 7 years. And then we saw it trickle down, 620 a year later, and then over 10 years, it got back down to 580. I don't think it's going to take us 10 years to get back to 580 again, but that market sucked up really, really fast as soon as, the market realized, wow, there's a lot of, unemployed people. There's a lot of deferred payments. As a bank, I can't loan $200,000 and think that these people are going to not be able to make payments for the next 6 months. I mean, we only have so much money we can lend. So the responsible business decision at that point is to try to lend responsible money. And it really just puts everybody in a holding pattern. I love putting the tougher loans. I love putting the veterans in houses. I love doing deals other people don't want to do. So it messes with my income. It messes with, honestly, the joy I have from my job. But the reality of the situation is we're all in the same market together right now. If someone tells you they can't do it, most likely no one else can as well right now.
Okay. Well, I think that about covers, just educating people on the fact that, if you are kind of in that, you have one of those more difficult loans, at least, that, just kind of keep communicating with your lender and see if, that way you can prepare yourself if you need to make any changes, or if they haven't, like you said, if they haven't found a house yet, they can say, hey, let's just hold off for a little bit longer until either we get the credit up, or just, things change again, like you were saying. So
yeah, absolutely. And you know what, I think a good lender right now understands that. I hear a lot of times, well, this lender doesn't want to work with this guy because he's not ready, this and that. But I think right now, more than ever, as lenders, we understand that we need to help our clients be in a win-win situation. We need to use this time to get them to where they can buy later. I truly believe because of this atmosphere we're in, as soon as it goes away, we're going to see a rush to the market for home buyers. And the more prepared you are to get in that market, it's going to be a very, very competitive market. I think a lot of people are sitting at home realizing their house is too small, realizing they don't like where they live, and they're going to want to get out and about. And I think that market is going to be so competitive that a smart loan officer who cares about his clients will use these 2 months, 3 months, whatever we're in, to help his clients be in a more competitive space when this is all over with.
Right, exactly. All right. Well, thank you so much for taking the time. For those of my clients who don't know you, or just people who are watching that want to get in touch with you and ask you those questions, and how do they reach you?
Yeah, absolutely. It's Saturday. I'm at the office, so I work all day, every day. So I give people my cell phone. I don't care when you call me. If I don't answer, I'm asleep. But any other time, I'll answer. My cell phone is 337-501-0155. I am on the North Shore, but we serve all of Louisiana. We serve all of Texas, and we do every loan type. So been doing this for 15 years, and I love helping people more than I love doing financial stuff. I do this for the people. I do this to help educate people. So this is really, I hate to say it's a perfect time for me, but this is a time where I feel like I can offer real value. It's not just about the numbers right now. It's not just about the best deal. It's really about how you're going to help people, how you're going to educate people. And that's the part of this that I love.
Absolutely, 100%. Well, thank you so much, Jordan. I'll
Thank
be
you for
sure to
having me.
go ahead and add some links. Huh?
I said, thank you for having me.
Yeah, absolutely. I'll add some of the links on here so people can go ahead and reach out to you in the detailed description. So thank you so much, and I hope you enjoy your Saturday. If you guys have any other questions, you can reach me and reach Jordan. But yeah, hope you guys enjoy your weekend and stay safe.
You're the best. Thanks for the opportunity.
Alrighty, bye.